All right, here's the verbiage, and then I'll show you it on a chart. So basically 5 to 10 minutes before 2 p.m. Eastern Standard Time, there's usually a little push in one direction to fake people out. Then right at 2 p.m., the minutes are released and price will go basically in one single candle in a direction for 30 minutes. Don't trade that fake out. At 2:30 p.m., 30 minutes in, Powell will come and speak and calm everybody down. And when this happens, there's usually a retracement into that candle that was produced. And then finally at 2:45 p.m., the liquidity is cleared and we tend to go in a general direction for the next couple of days. Okay, so let's turn on FOMC. Right here at 2 o'clock is when the notes are released, and you can see there's a very big red candle sucking people in to go short. And then right when they're going short, Powell talks, and this is where we tell you we tend to retrace back into this red candle, and sure enough, there's Powell talking. We retrace back into that original candle. We take the high, and then this is going to be the high for the first hour. So there's the low, and there's the high. You can see we put these in there to help you. And then, like we always tell you, when that next candle starts at 3 p.m., that's when we tend to just take a direction and price just goes and it doesn't look back. That doesn't mean that it can't come back up here. It's just the point is it just tends to go in one direction, and you can see the entire market sold off. But again, just trying to show you how helpful it can be. Look at this back test. Look at the back test to all the tick, and then price reverses. So these can really help you. Again, set the first at 2 p.m. Eastern, wherever the low is for that first hour is you're going to find the low and high, and then that's where you're going to leave those lines. Okay, now let's check out another FOMC example. Like we talk about, right at 2 o'clock at the release, which is right here, you've got wicks going on both sides when the volatility kicks in, and then the next candle opens. This is when Powell starts talking. It retraces, like we always tell you, this is a green candle. So in September, it was a red candle. So this is a green candle. So what does it do? It retraces downwards into this green candle. So once this has settled, when price starts to go up or down, we want to locate if there's any fair value gaps. We can see that underneath price right now, we have a big inefficiency. So we tend to see candles just like on the previous examples, and just like CPI, price likes to come back down, fill in that inefficiency, and then take off. And as you can see here, it does. We'll pop the rules up again. At 2 o'clock, you're going to see volatility. You want to be on a higher time frame. Mark the low of whatever that first hour between 2 and 3 p.m. and then mark the high. Powell talks at 2:30. It tends to retrace back into the candle that just printed. If it's a green candle, it's going to go lower. If it's a red candle, it's going to go higher into it. And then once that 3 o'clock candle starts printing, that's when we tend to pick a direction and we go. Hope you all enjoyed that stream. Please check out our channel, subscribe, and like to get notifications for more trading strategies.